5 profitable trading strategies, but each one gets a little more complex than the one prior. Number 5, and the least most complex profitable trading strategy, the Warren Buffett, the buy and hold. Guess what? Over time, most stocks go up. Companies that reach the level that is required to IPO are already pretty successful, thus typically continue being successful. Not to mention that inflation just continuously raises the price and valuation of everything, including stocks. So most stocks will go up. So most stocks will be profitable with a buy and hold strategy. I have one turned on my Thinkorswim chart right now. It simply buys at the beginning of the chart and then never sells. And this floating P&L indicator down here will show you the profit or loss of the current open trade or strategy in general. The way we are going to test and look through these strategies today is just by clicking through the ABCs of ticker symbols. That's the easiest way to get a random cross-sector analysis of kind of subsets of data of stocks to see how the strategies perform. So A, green, B, green, C, green, D, green. And right now we're looking at the daily charts. Let's try this. Let's hop down to the 5-minute over the last 180 days. D is green. Let's go backwards. C is green. B is green. A is green. The buy and hold strategy, it's profitable on more stocks than it is not. Therefore, it is a profitable strategy that requires no rules, thus being our least complex one for this video. At number 4 on our profitable strategies list, we are going to look at a strategy that only has one rule for both entering and exiting. This is a simple moving average crossover strategy that is going to enter when the 50 SMA crosses above the 200 SMA, and it's going to exit when the 50 SMA crosses below the 200 SMA. If we look at our next subset of alphabetical tickers on the daily chart, we've got the ticker symbol E, green. We've got the ticker symbol F, green. Ticker symbol G is green, although just a little bit, but still green. And then we've got the ticker symbol H, still green. Number 4, one rule, still profitable. If you're interested in these strategies that you see me running within my Thinkorswim, they're all available to download from my website, daytradingstrategies.net, along with their associated scanners so that you can find the stocks matching these setups. There's a link in the description down below. Go sign up today and become a better trader. Number 3 on our complexity list of profitable trading strategies, we're going to look at my reversal strategy. This one only comes with 2 rules for entering and 1 rule to exit. Very simple, but there's also another little secret twist to it as well. So our rules for entering: the current price must be closing above the 200 simple moving average and below 40 on the relative strength index. This means this stock is strong, but currently on a dip, right? And then when we sell is when the current bar closes with an RSI value, a relative strength index value, over 45. We're just looking for a small bounce when you're trading a reversal kind of strategy, right? You're not looking for a big move. Just buy the weakness, sell the strength, lock in the profit. Now, the strategy, the secret to this strategy, as you can probably tell, is the strategy will scale in up to 10 times as long as those buy conditions are true. Remember, above the 200 SMA, below 40 on the RSI, the strategy will continue buying. It scales into the position and then obviously looks for that exit. If we go ahead and click through our next list of stocks, I doesn't exist. This ticker doesn't exist anymore. So we're going to go to J, profitable, K, profitable, L, profitable, M, profitable, N. This is a bond index. This isn't a real ticker. So let's go to the next one. O, profitable. Our second most complex profitable trading strategy we're going to cover in this video is my runner's large cap swing trading strategy. What this strategy is doing, it is entering a stock once it has been over 3 on the percent change indicator for the last 3 days. What the percent change indicator is doing is it's taking the open of the current bar, at least the way I have it set up. It is taking the open of the current bar and comparing it to the open of the bar from 14 days back. So it has to be at least 3% up from its last 14 days for the last 3 days. Just kind of that continued multi-day strength, then this strategy will enter. Now, its exits are a little complex as well. It uses the average true range as its reason for exit, and you can see that denoted by these 2 lines on our ticker symbol R here. The cyan line is sort of the running trailing stop. It is the average true range based, like subtracted from yesterday's closing price so that there is a trailing stop. And then this more purple kind of salmon colored line here is the average true range, but anchored from our entrance point, and that works sort of as our running stop loss. And then there is also a third reason that this strategy will exit, and that is if the percent change indicator hits a low number, which I believe off the top of my head is -10. I'd actually maybe have to check on that, but I think it's -10 on the percent change. So basically just a catch-all to, hey, it hasn't dropped enough to hit the trailing stop, but it has dropped, over the last 14 days. It has dropped. Let's go ahead and get out of that as well. Now, I will do the alphabet thing. We'll click through some of the next kind of tickers running down the alphabet like we've been doing, but I did build this strategy more for volatile tech companies, your Tesla, Nvidia, Apple, Amazon. That's kind of why I built this strategy. They're not necessarily built for these stocks, but we'll look at these anyway, and then we'll look at some of those other stocks that this is meant for. R is profitable. T is not profitable. S is not profitable. T also not profitable. U is profitable. V is actually nicely profitable. Nice. But let's take a look now. Let's look at some of the other stocks. So like this was built for moves like Nvidia makes, for moves like Tesla makes, for moves like Apple makes, right? You're much more volatile, large technology, typically companies, is why I built this runner's swing trade strategy. The number one and most complex with the most amount of rules strategy that makes money in the stock market that we're going to cover today is my breakout strategy. Now, this strategy actually isn't overly complicated. It just does end up taking a lot of trades, as you can probably tell from the chart behind me. Really, all the strategy is looking at here, it is plotting the 200 simple moving average, which you guys might notice I enjoy using this indicator systematically to determine strength of ticker, right? If the ticker is closing above the 200 simple moving average, then has a green candle in which the volume is greater than the average volume over the last 14 bars, that's our entrance. So we are looking for strong stocks trading heavier than normal volume on a green day. We get in. From there, from our entrance price, we set up our stop loss as entrance price minus ATR, which is the average true range of the last 14 bars. And then our exit is entry price plus ATR times 2. So we're setting up a 2-to-1 risk reward exit based off of the average true range plus or minus our entry price. If we finish out the alphabet here, we are on W. You can see it's making money. On X, once again, a lot of trades, but profitable. Y, looks like this is no longer a ticker. It looks like it was making money when it was a ticker. And then to round out the alphabet on the daily chart with Z, here is our number one stock, the breakout strategy, making more money. Guys, I'm super close to 10,000 subscribers. If you enjoyed today's video, please consider subscribing. It's completely free. And once again, if you enjoyed these codes, would like to access them, click the link in the description down below, go sign up. I'll catch y'all in the next video. Thanks.